Hello and welcome, I'm Suyash Maheshwari and you are watching Last Sick here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. And Indian markets, they stage a remarkable comeback with Nifty rising about 280 points from its intraday low. Now the session kicked off on a muted note as Nifty broke below its previous week's low to fall at its lowest level since March 20. However, the bulls returned back to action in the morning trade itself, and from there on, the only way the index went was up. I think what's more impressive that the buying intensity was so strong that the 50 share index was also able to close very close to its intraday high. As a result, Nifty was able to form a hammer candlestick pattern. Now, while it was not a classic hammer pattern due to the presence of a small upper wick, it does have major implications. So, in a downtrend, a hammer candlestick suggests potential reversal. It's a small body and a long lower shadow suggests that buyers are gaining strength and indicates a potential shift from bearish to bullish. As far as the sentiment is concerned, it forms when sellers push prices lower but buyers push them back up, showing possible exhaustion among sellers and hinting towards a shift, and perhaps a shift towards upward momentum. Now, does this mean that this correction is over? Not necessarily. For that, you will also would want to see a few other technical indicators to suggest that the trend overall has actually reversed. For now, let's look at the levels that you would need to track. The first level to take out on the upside remains at 22,166, which remember is nothing but the 61.8% retracement of that entire recent rally we saw from the April low of 21,777 to the record high of 22,794. Beyond that, 22,280 odd levels could come into play. This is where your 40-day exponential moving averages and the 61-point retracement level is. So that is, the levels of resistance that one would need to track. On the downside, Nifty should find support at the 22,000 mark. It's not only a key psychological level, but also the 50% retracement level. To be precise, a 50% retracement level works out at 21,995. But for all essential purposes, 22,000 is the level to defend now. Below that, if we do break below 22,000 levels, 21,930, which is Friday's low, and 21,820, which is today's low, should provide support. But with that, also joining us on the show now to share his views on the market is Mr. Shrikant Chauhan, Head of Research at Kotak Securities. Sir, thank you for joining us here on News 9. And Nifty, I mean, what a strong recovery, the bulls were able to stage in today's session, with the index recovering about 280 points from the intraday low. The index was not only able to close in the green, but it also closed above Friday's closing as well. And I think, on the price chart, what's more impressive to see is the formation of this hammer candlestick pattern. Now, in a downtrend, it could perhaps signal a reversal. But the question really is the worst over? Do we need to see more from the index to actually say that the correction is over for now? Your thoughts, sir?
Yeah, good evening, everyone. I think, the worst was not there at all in the market. It was just like correcting from the highs. The market was around 22,800 levels and it was trading with expensive valuations. Also, if we go through with the technicals, then it was somewhere close to overbought territory. And from there, all the way it started correcting. And most of the time, if you see the past few occasions like 2014 or 2019 and this time, at the beginning of the month, I mean to say in the month of May, first few days we see correction in the market, especially in the election times. And in the middle of the month, we see some recovery, and later on, we see activity based on the outcome of the election. This time also, we are expecting similar sort of pattern, and we are like more similar to the pattern of 2014. So this time we are of the view that 21,700, which was its previous lowest level. And if we see the pattern of last 3 months, then most of the time, whenever the market has fallen to 21,700, from there all the way, we saw recovery in the market. We are of the view that the market has completed its corrective pattern. Now it is ready to bounce up to 22,500 or 22,600 in the best case scenario.
Right.
If it crosses 22,800, then it will be a really meaningful rally that we can see in the market. Otherwise, it's a bounce back from lower levels, and yes, it is going to sustain for at least next 1 or 2 days.
All right, Nifty could perhaps continue to bounce back, but 22,500 I think would be the first gatekeeping level for us to see if the bullish momentum continues, and if 22,800 is taken out, perhaps we can see some follow-on buying as well. But sir, last week we witnessed a dichotomy in stock performances between India and the rest of the world. I mean, Wall Street experienced one of its best week. In fact, Dow Jones experienced its best week in 2024, whereas our markets saw one of its worst performance of this year. Not only that, India was also the worst performer among all Asian peers as well. So apart from the election jitters, what do you think explains this decoupling of sorts between global markets and Indian markets?
So it was decoupling mainly because of rising interest rates. I mean to say rising bond yield in the US markets. The bond yield was around 4.20. From there all the way it went to 4.60, 4.70 levels, and it is still quoting at 4.50. Also, if we go through with the overall performance of the dollar index, then it is still at 106, 105 levels, and our rupee, Indian rupee, was around 83.50. So while looking at the global macros, it was like something unfavorable scenario for our markets. And maybe that's the reason we saw a correction in the market. But otherwise, if we see the overall performance of our institutions, domestic institutions, they are consistently infusing a lot of funds in the market. Even though FIs are consistently selling into the equities, domestic institutions are consistently buying, and eventually, after hitting the important levels, I think we saw specific buying interest in the market.
All right, and to your point, sir, FIIs, although have been incessantly selling, I mean, last week alone they sold equities worth about $2.3 billion in Indian markets, but our domestic institutional buyers, they have been able to offset some of those losses and help the market from falling further. But it's going to be an event-heavy week. The fourth phase of polling has begun, and also we are in the middle of the earnings season. 200 companies will report their Q4 numbers in this week as well, but we also have CPI data coming out in US and in India. I mean, plenty for the markets to track. What are you focusing on for this week?
I think, see, what is important, it is the overall performance of the market based on the CPI numbers as well as numbers which are going to come in the US. I think that will impact a lot, because then it will decide the overall flows for emerging markets. If we see any jump in the bond yield of US markets from current levels to, let's say, 4.70, 4.80 again, then it will have negative implications. But in case if we see any drop from current levels to 4.20 or 4.10, then it will have a very strong push for our markets, because otherwise we don't think that the overall outcome from the these elections, I mean to say the polls which are going on, right, I think that is going to impact the markets.
Right. And where do you see bond yields heading, sir? Is it going towards that 4.7, 4.8% levels, or are we going to see some bit of retracement towards that 4.2% mark? Where would you hedge your bet against?
I think for that, our view is that it is heading for the levels of 4.20, 4.10. Right. The reason is because if we see the data of last 15 days, which have come in the US markets, then they are supporting to the cut in the interest rates. I think that data it started deteriorating, and that will actually help Fed to go for cutting the interest rate in the near future. I'm not saying that they will cut in the month of June, but yes, probably they will start talking about it.
Interesting. I mean, not many are expecting Fed to cut interest rates by June, but that would certainly be a positive for emerging markets, because I think bond yields, if they will come down, it will offer, it will bring on that risk on sentiment towards global equities, and emerging markets like India will stand to certainly benefit from that. But on that note, let's slip into a short break. But Mr. Srikanth, please stay with us. We have plenty more to discuss with you on the other side.
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Golf as a game, it is closest to the game that you call life.
You've got to use your mind. You cannot lose it.
The sharpest person is one who understands his limitations.
खुद ही को कर बुलंद इतना कि खुदा बंदे से पूछे कि तेरी रजा क्या है.
You might have a bad break after a good shot, you might have a good break after a bad shot, but the fact remains, you got to play the ball from where it lies.
Watch Jeev Milkha Singh on Duologue with Baroda, streaming on News 9 Plus.
Welcome back. You're watching Last Tick here on News 9. Before we slipped into the break, we were talking about, if this recovery could continue in the markets. And one of the drivers, I think, in this recovery would be banks. And one of the banks that were in focus was Bank of Baroda. Now, the fourth quarter numbers of India's second largest public lender were impressive. What stood out to me, at least, was a strong loan growth as well as the strong deposit growth. Also, NIM's expansion, which I think the street was expecting some sort of compression as far as NIMs, your net interest margin, was concerned, but we saw expansion of about 7 basis points on a year-on-year basis. Even the outlook shared by the management was good. I mean, according to Chief Devdatta Chand, the public lender plans to double its total business to 48 lakh crore in the next 5 years. That is a CAGR of 13.5%. I mean, the bank also got a big relief last week after RBI lifted the ban imposed on the public lenders BOB World Mobile application. So, multiple positives for the stock. However, the stock is one of the cheapest among state lenders, and I'll come to you, Mr. Chauhan, on this. It is still one of the cheapest as far among the state-run lenders is concerned. It is currently trading at a price to book of about 1.28 compared to SBI's price to book of 2. Is this discount justified?
So for Bank of Baroda, our view is that it is like something which is going to do well in the future. The reason is because they have very strong loan growth. At the same time, if we just go through with the asset quality, then there also we have seen a lot of improvement. This time the stock was down mainly because of slippages, and it is from all small businesses, so which is not a big threat. But at the same time, if we see the overall trend of all these PSU banks of last several years, then even quoting at let's say 1.7 or 2 times is also at the upper band of the valuations. So currently we are of the view that yes, there are like a lot of things which all these PSU banks are discounting. So from here, yes, we can see some 10 to 12% or 15% sort of rally or upward activity in next 12 months of time. But at the same time, we should not be like overly bullish on the stock. It is better to buy at current levels and more on dips. Broadly, we are of the view that it is like something which is from the top 3 strong peaks from Kotak Securities, Kotak institutions. But at the same time, we are of the view that there should be a mix of private as well as PSU banks.
Alright, that's the view on Bank of Baroda, but we'll shift focus to another stock that was in the news, and that was Tata Motors. And Tata Motors stock fell about 8%, in fact over 8%. It was the biggest drag on Nifty. It was responsible for about 35% of all the losses that came Nifty's way. Now the results were good. I mean, if you look at it, FY24, the company reported highest ever revenue, highest ever profit. Its India business was able to go debt free. I think what disappointed the street was the cautiousness indicated by the management. They expect the first half of FY25 to be weak, and they also expect JLR margins to be flat in FY25. But again, Mr. Chauhan, I'll come to you. Tata Motors has been one of those wealth creators. I mean, before today's fall, it had turned multi-bagger in the last 1 year, has essentially, I mean, for those not in the know, multi-bagger stocks are those that pretty much double investors' wealth in a span of 1 year. But again, I mean, this 8% crash on weak management guidance, do you think that is a little too much? Or, I mean, is it a good time to buy considering the stock has come off significantly from its, from its intraday, from its actually record high levels?
Yeah, broadly, we are positive on the stock and the company delivered in line with expectations numbers. The stock was down mainly because of CV business, which reported EBITDA was down more than 15% below our estimates. Also, if we could just go through with the other consensus in the market, then there also they were expecting some specific rise in the CV business, but there they lost. And maybe because of that also, we saw some correction in the stock. But otherwise, if we just go through with the overall performance of the stock, then JLR business is really doing well. In fact, very first time, they are like, they have reported free cash flow for the business. And also in the coming year, I mean to say in FY 25-26, they are going to be a net cash balance sheet. So broadly, we are of the view that it will be an opportunity for investors to invest. Currently, all the expensive stocks which are very close to their fair values, they are getting punished if little bit disappointing reason comes from the management or in the result. But otherwise, I think all these companies are going to do well in next 12 months of time.
And I think you made a absolutely brilliant point over there. You know, in Q4 at least we have seen that management commentary is what's getting the most attention. Look at Tech Mahindra. I mean, the results were nothing to write home about, but the turnaround plan presented by the new CEO, I mean, that gave hopes to the investors and the stock rallied about 8% and more from there on. In contrast, Bajaj Finance, the number were all right, but the management commentary was weak, and that's why we saw a fall in stock price. I think the attention is, of course, the markets are always forward-looking, so, the guidance will be keenly eyed by the markets. But this time particularly, it looks like management commentary and what the management guidance is being, at least what the management guidance is coming from the management again, it's being keenly eyed by the street. But on that note, we'll bid you goodbye, sir. Thank you for your time and thank you for your great insights.
My pleasure. Thank you.
Alright, before we wrap the show up, Zomato's Q4 numbers are out and Zomato has reported a net profit of 175 crore for the January-March quarter, marking a 27% quarter-on-quarter jump. This was also, by the way, the fourth straight quarter of profit for the food aggregator. However, the bottom line was still lower than estimates. The estimates had pegged net profit to come in at around 191 crore. Revenue from operations in the quarter under review stood at about 3,562 crore, marking a 73% year-on-year jump and 8.3% quarter-on-quarter jump. Despite this massive jump in revenue, it was still lower than what the street was expecting. The street was pegging the figure to come in at around 3,570 crore. Zomato India's online food ordering business and delivery business reported a revenue of 1,739 crore in Q4 FY24, which was up from rupees 1,172 crore reported in the year-ago period. For the full financial year FY24, revenue in this segment stood at rupees 6,361 crore as against 4,533 crore in FY23. The quick commerce business, Blinkit, over there the revenue surged by about surged to 769 crore in the said quarter, which has more than essentially doubled from Q4 FY23 where it stood at about 363 crore. For FY24, the segment contribution to revenue was 2,301 crore versus 806 crore in the year ago period. Now, after the results were announced, the stock plummeted. It was trading in the green, but right after the results were announced and it was noticed that the earnings have missed street expectations, the stock was down by about 5%. But from there on, it was able to pare some of those losses and ended about 2.3% lower. Remember, Zomato has been one of the big wealth creators in the last 12-15 months. In the last 1 year, the stock has essentially tripled, delivering returns of over 200%. Year to date, despite today's fall, the stock is still up almost 60%. Alright, that's all we have in this edition of Last Tick. We'll see you tomorrow at 9:45 am on First Tick. Coming up next, although, is Business Plus.
Can the Trinamool candidate from Baharampur hit the ball out of the park?
50-60 दिन बहुत ज़्यादा बोल रहा हूँ, उससे पहले ही काम दिखने स्टार्ट हो जाएंगे.
Pitted opposite Pathan in Team BJP is Dr. Nirmal Kumar Saha.
The fight is not Adit Chaudhary and Nirmal Saha. The fight between Modi versus Rahul Gandhi.